How much of this money do you want going to you and your family? And how much would you like to go to the IRS?
Reaching your peak earning years feels like a good problem to have until it comes to dun 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 taxes. It can be confusing to know how you're making right decisions in your tax planning. So today we're cutting through the confusion, getting clear on setting long-term goals, and changing the way you think about tax planning. A spoiler alert. It's not just for a few months every year, and we all know tax time is coming. It's for the whole year. So hello and welcome to Money on Your Mind from Edelman Financial Engines. I'm Michael Liersch, a behavioral scientist, financial planner, and chief planning officer at Edelman Financial Engines. Thanks for joining us for a conversation about how people feel about money, what they're wrestling with, and how financial planning can help you straighten things out. Today, we're talking with Doug Ulrich, an EFE financial planner. Doug, welcome to Money on Your Mind.
Thanks for having me, Michael.
And I just want everyone to know you've been a planning professional for, over a couple decades now. You have a lot of different designations, CFP, so certified financial planner, all the way to actually being a CPA. So you've done taxes. You've done financial planning, so you're passionate about the topic we're about to cover. You're passionate about your clients. You and I have hung out in Chicago together, but why don't you tell everyone a bit about your kind of personal journey to getting to this point and your professional passions about taxes and financial planning?
Absolutely. Well, once again, thanks for having me today. Quick background. I'm one of 8 kids.
8? I didn't know that about you, Doug.
8 kids, yes.
Wow.
My poor parents. In any event, I'm an identical twin. And
I didn't know that either.
Well, there you go. I'm full of surprises, Michael. In any event, identical twin, one of 8 kids. My dad was an electrician growing up, so money was always tight. With a large family and one salary. So very much a Midwestern upbringing. And out of high school, my twin brother and I joined the U.S. Marine Corps. We're in the Marines for 4 years. We got out. We did a lot together. It's my best friend. And so we wound up going to boot camp together. Lots of stories there for another time. Going through the Marines, got out, went to the University of Illinois together. We both went to flight school while we were there. He then became a pilot. He flies for United Airlines, and I became a financial planner. I then pursued my passion in financial planning. I've been doing this, as you mentioned, for a few decades. Along the way, I picked up a bunch of designations, including my CPA. And in a prior life, prior to Edelman, I actually did taxes professionally as part of my practice. So I know the ins and outs of not just the planning side, but also the preparation side. My passion lies very much in the planning side, in conjunction with general financial planning.
And so in this concept of tax planning, and even this versus tax prep, how to think about that, a lot of people are asking the question who are, let's call it 10 or less years away from retiring. So they're kind of in this moment, high earning years, a lot to do. It's almost like this confidence cliff we've seen where you feel good about what you've done. And then suddenly, there are catch-up contributions, Roth conversions, so much to deal with Uncle Sam. How are you going to ready yourself for that time where you're no longer working, right? It's just very overwhelming, Doug. So we want to focus on the audience. So why don't we kick it off there?
My joke is, can you think of anything more exciting than taxes, right? So let's talk about taxes.
I love taxes. I love them.
Yeah, I think, first of all, we have to clear up what tax planning actually is. I think there's a lot of misconceptions about tax planning, and most people, and it's not really their fault, it's marketed this way out in the general public, they confuse tax planning with tax preparation. They're two separate things. They may coincide for a little while, but they're really two separate things. Tax preparation is more like the score of a football game or something, right? It's when the game is over, hey, what happened? Now, you may be able to do a few things afterwards, but the game is already over. The stroke of midnight, 12/31, that tax year ended. So you don't prepare the return until the following year. and there's very limited things you can do at that point. Versus tax planning is more like being the coach on the sideline of your game, and you get to call the plays. You get to influence the outcome throughout the year. And that's why you'll often hear around our circles and good tax planners out there, it's really a year-long sport. You're not just playing seasonally when it's tax filing season. You're doing that tax planning throughout the year, different parts of the year. And I believe you talked about this in a prior podcast a little bit about that kind of thing. So there's certain kinds of things that are happening at different times of the year. Okay. So tax prep versus tax planning, that's how I would.
So let me react to that, because that makes a lot of sense. Because tax prep, you're right. It's almost like the terminology in of itself, the word preparation makes you feel like there's a lot of action that you could take to make it the outcome different. And what I'm hearing from you is actually not really a true story. By the time you're doing the tax preparation, it's really just describing what happened, and that the outcome is relatively known, unless you maybe like a law has changed unbeknownst to you, or some type of, deduction that you weren't aware of. That's really about either it being beneath your own awareness, or like a change that, happened, within the year. Whereas the tax planning component is the thing you have a lot of control over. Nothing really technically has happened yet. You have a lot of control that you can exert over it. So why not lean into it? And that's what makes it exciting. Am I getting?
Yeah, that's the exciting part. And I think the other thing that I think needs to be discussed here is that you have to revisit your whole approach to this. I mean, most people, they never really think of tax planning as, they don't even think about tax planning. They're just doing tax preparation.
Yeah.
And so you have to me, have a structured way of how you go about this. And that's what we do with clients. So the question I will ask clients to kick off the conversation is simply this. So you've got this pile of money. How much of this money do you want going to you and your family? And how much would you like to go to the IRS? And then I just look at them.
So right? That's an interesting
people say,
answer. What question? What answers do you get? I am curious now.
Like, why would I want anything to go to the IRS? It's a curious question, because see, without planning, you're going to wind up with a much larger portion of that pile going to the people you don't want to get it, right? Versus now that might involve you actually paying more taxes today, so that over the lifespan of your life, you're actually paying less tax and enhancing your wealth.
So let's say someone's into then this idea of tax efficiency, tax optimization, making sure they make the most of their money, and that it comes to them so they can make those choices of what they want to do with it. What are the common one or two things that you see, cropping up?
What you want to do is model out the current year. And this is the important part. You want to look ahead to where you think you're going to be.
Okay.
Because you cannot know, or it's harder to know, I should say, the choices to make today without knowing what that future cost is going to be. So in other words, if you know you're going to be in a certain tax bracket, or if you're confident you're going to be in a certain bracket in, say, 5 years, then what we can do is drill into choices such as make contributions to a traditional 401k versus a Roth 401k. So right there, that choice hinges really not on the current year, but really about future years.
So this is really interesting. So it does become almost like a complex puzzle that's solvable, but you have to put the time and energy and effort into working with a professional to figure that out. And looking back, and then also to your point, looking forward. I love this idea, and you can't just do it at tax prep time.
Yeah, and absolutely. You don't want to do this at tax prep time. But here's another idea that you want to consider. Okay. And it's conceptual. This can apply to anybody at any age, really. But I think it starts to become more important to be looking at this when you're in your final stretch. And that is, what bucket of money am I looking at? So imagine you earn money.
Yep.
And you paid taxes on that money, and you now have money left over each month, or it's a bonus or whatever, and you now invest that money somewhere. That's taxable. What we call a taxable bucket, because it's money that you've already paid taxes on, income taxes. But now you're going and investing that money in a place where it can now grow over time. As it grows over time, it's building up a future tax, albeit it's kind of a hybrid. It's somewhat taxable, but a
Yeah.
good portion of it is actually tax-free. Okay, so that's a taxable bucket. The tax-deferred is what we know as a 401k or an IRA. There's never been a dime of tax paid on that. That is, for most people, by far their biggest bucket. It's their life savings, et cetera, which is exciting, but it comes with something you're going to want to analyze, which is, what is that going to cost me in the future in income taxes, right? So that's the middle bucket. And then the tax-free one, which probably a lot of people are excited to hear about, that's a Roth. Now, to get money into the Roth, you have to first pay taxes. So that's the downside. We don't like that part.
Yeah.
But then once it's in there, it grows tax-free forever. Okay, or at least for as long as you're working, et cetera.
Sure.
So those are the three buckets. And so there's kind of two parts to this. There's the how do I structure funding each of those buckets?
Yeah.
Okay. So a big part of what I get passionate about is first making people aware that these buckets even exist, right?
Yeah.
And then number two, how do you end up for your goals, for your life and what you're trying to do? How do you best fund these various things so that you can set yourself up with a lot of flexibility?
But do you feel like when people get a tax refund, because a lot of tax prep is associated with those tax refunds people get, everyone gets excited. And I will tell you, me, Michael Liersch, I get a little less excited because I'm like, well, it was always your money. And so a refund is like good, but maybe you could plan a little better to minimize the refund. And that sometimes doesn't resonate with people. Can you share your perspective on that?
People are taught really that getting a refund is a good thing. Hey, how are you going to spend your refund? And the different softwares that are out there that will help you get the biggest refund. And people think that's good planning, that they've done that. And look, who doesn't want a refund on something, right? Who doesn't get excited? Of course you're going to get excited until you realize something. That was my money all along, wasn't it? Right? So here's the way I like to explain this to people. If they're totally lost on taxes, if they're getting confused, I say, imagine this scenario. You go out for dinner. So imagine you're going out for dinner. You sit down at the table, and then you start to order your food, okay? But here's the thing. You don't know the prices on the menu. You just see a menu. Okay, so you're picking things off the menu, and the way it works is you've got to guess what you think the price is going to be, and you got to pay the waiter as you go. Let's just say, for example, that you guessed that the meal cost $100. Okay, so you've been paying throughout the meal, and you get to the end, and you've paid $100 for this meal. The waiter comes back, and he hands you a bill for $120. How do you feel? Ooh, I don't feel very good about that. And then the waiter's like, look, you've paid $100 toward this $120 bill. Here's what you need to do. You need to fill out this paperwork, and you need to send that back with me, and I'm going to take it back, and then you're going to write it, give me the extra $20, and you go through this formal process. But then right when you're getting ready to do that, you're like, oh wait, I just remembered. And you reach into your purse or your wallet or whatever, and you pull out a coupon. And you got this $40 coupon off the meal. So it isn't $120, it's only $80. Standard deduction. That's how that works, right? So now you just lower the bill, right? So now you thought you had to owe money, and now all of a sudden you're getting a refund for $20. But then the same thing, the waiter's like, well, wait a minute, that's great, but here's what you need to do. You're going to fill out all these forms, and then you got to pay a fee, and then we're going to wait for 2 months, and then we'll give you your money back. You'd be like, well, do I have to eat at this restaurant, right? But that's how taxes actually work, right? It's that kind of a analogy, right? But here's the question: is that good planning? If you already knew you had the coupon all along, would you have probably thought through that a little bit differently about how you were paying for the meal, right? And that's
I grew up where we clipped all our coupons as a family every weekend, Doug, before we did anything for the week.
Got the Sunday paper, right? We all got the Sunday paper.
No irony here in being the chief planning officer.
There you go.
I'm following
honestly,
along.
Yeah, and it very much that is sticking with that coupon analogy. That's kind of what a lot of these firms like to boast about, the tax preparation firms, that is, that, hey, we have secret coupons you didn't know about or something. It's like, well, there's a handful, but those are very, very limited, and there's not much you can do. And even if you could do all that, is that really still the best approach?
What you're also highlighting here too is that planning helps you do that in a much more thoughtful way, so that you really, minimize your tax bill where you can, rather than just being reactive on the other side of all of that. Let's shift to our last two questions here in the podcast, which is really the first one. Tell us a key mistake that you see clients make And maybe it's just a repeat of some of the things that you've shared with us already. And then we'll move into an action you think they should take. And then we'll close out.
So a mistake a lot of people make is they think of tax planning as tax preparation, when really tax planning happens before the preparation. So that's the biggest mistake, is thinking of it as an event rather than this lifetime or year-long sport that you need to be doing.
And then on the action, then what would you say that people should do to lean in then to this tax planning, year-round, lifetime engagement?
So it starts with knowing where you are. Just like you want to know if you're planning a road trip and you want to know if you're trying to go somewhere, you got to know where you are on the map, right? So the first thing and most powerful thing I think people can do is have their tax return, their prior year return, analyzed by a professional. But start, if nothing else, by looking backward to see what happened. That better positions you for the future.
So, Doug, this has been really helpful and informative. I love the dichotomy between, tax preparation, tax planning, and ultimately how to make tax planning more inspiring and exciting, which is you actually have a lot of control over it if you get ahead of it and you act as your own coach, or you work with a professional to be a coach along with you to organize those plays in a way that help you win, rather than just seeing the score on the board when you're filing for your taxes. So really, really helpful. And as always, Doug, really enjoyed the conversation. Thank you for sharing your wisdom with our listeners, and maybe we'll have you back. What do you think?
Sounds great. Would love to be back.
All right. Thank you. Yes. Thank you, Doug. I appreciate it. So for all our listeners, you heard it here. Get into those taxes, make it fun. Think about the year ahead, not just what's going on right now. And that ends up being everything we have for you today. This has been Money on Your Mind. A big thanks to financial planner Doug Ulrich for joining me, and we'll be back next Wednesday with a new episode. Subscribe to the show on Spotify, Apple Podcasts, or YouTube so you don't miss it. And we'd really appreciate it if you left us a rating too. I'm Michael Liersch from Edelman Financial Engines. Talk to you next time.